Hello everyone, I'm Corey Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of November 18th. This article gets updated each week. If you're ever wondering where it is, you can go to TradeThatSwing.com, go to Stocks, Stock Market Analysis and Trades, and you will see it there. So each week, just going through the same process, looking at how the indices are performing, market health indicators, recent watch list trade performance, sector performance, getting an idea of how aggressively I want to be trading. The trading process is I look at overall conditions first. That helps me decide whether I want to be trading and how aggressively. Then look at individual stocks. Then we're waiting for patterns and triggers to develop in those trades. Some watch lists here you can check out. The best swing trading stocks watch list is one of the main ones, just a list of really high momentum stocks at the moment. How the indices are doing. So let's look at some price action first. We can see we are in a minor correction on all these indices within an overall uptrend. The prices, if we look at the NYSE here, high here, high here, high here, high here, the lows all moving up. So overall uptrend, higher swing lows here, higher swing highs here. Same with the S&P 500, same with the Russell 2000, higher swing lows, higher swing highs. Same with the Canadian index over here. We'll get to gold and Bitcoin in a bit. So minor correction, this is less than 3% in the S&P 500. So a very common non-issue so far type pullback. Those are the types of pullbacks that occur, all the time. Little pullbacks. Obviously, if it starts getting deeper, then there's more of a concern, and our health indicators, which we'll talk about next, will turn negative. But right now, the health indicators are still positive. We're in a little pullback, and these are often the kind of situations that can develop, and I have no idea how this one's going to develop. This is not, I don't try to predict. All I'm doing is we have a pullback, conditions are good, I start looking for trades, and if the uptrend continues, you catch pops like this going up. And, just these types of situations where you get the pullback and a pop. So, yeah, overall, don't mind these types of situations where we're pulling back a little bit. And the nice thing about my methods is that I'm always buying once something starts to move up. So if it's pulling back, it has to start moving up before I buy it. So in a situation like this where we are pulling back, and a lot of stocks are pulling back a little bit, if the price just keeps dropping, we don't get triggered in to trade. So that's kind of I don't want to call it a safe method, but I just like that generally I'm getting in only when things start to move back to the upside. And if they keep falling, we just get to sit on the sidelines and trade Bitcoin. Bitcoin been phenomenal. We had talked about the range and the opportunities in that. Then we had looked at this breakout. If the pullback holds outside the range, the opportunity it would present, and it gave us a beautiful run to the upside. And we've kind of stalled right here around the 90,000-ish mark. So if we pop higher, great. I think 100 to 110 is a pretty big psychological area. A lot of people will be happy about it hitting 100,000, maybe some profit taking. So that's, I think, my main area of interest. But, it is stalling out here a little bit before that level. So we'll see. If it starts turning down, I'll, take profits and regroup. But if we get the pop higher, I think that 100,000 is a good area to watch, and then see how it reacts around there. The miners, the gold miners, we had talked about this last week. They'd sunk below this prior swing low while gold was still above it. That is a bearish divergence. Usually when this happens, shows some weakness in the sector, gold typically follows. The miners can be a bit of a leader in the sector. They move a lot more. They're kind of a more speculative type thing, so they can kind of have a bit of a foreshadowing effect. And so negative divergence, gold was still holding up, but I had said, you know what, I'm not touching this sector. I don't like that happened. Also, since I generally trade the miners, if I'm going to trade, I want to trade the thing that moves the most. gold doesn't move a ton compared to the miners. So this just didn't, I didn't like it because this is already starting into a downtrend last week because we'd had a lower swing low. That's not uptrending behavior, that's downtrending behavior when you start getting lower swing lows. And gold ended up following through to the downside as well. So that is just a no trade area for me right now. No reason to get involved. Let's look at the market health indicators. They are still in good shape despite this little pullback. Volume not really important to me at the moment. This is just daily percentage movement. And the main thing to look at here is that uptrends are generally quiet, lower movement. Bigger sell-offs typically have bigger sell-off days, 2% or more. We had one that approached that, but then was quickly recovered. So we have not had any really big sell-off days in quite a while. Going back to September was the last one. It was this day, had a little more downside. This one didn't quite get there. But even then, we had the big drop, and then it just kind of moved sideways for a few days, and we had the pop from the election. But this overall saying we're still in a bull market type environment where it's generally lower volatility, especially on the selling days. We're not getting really big sell-off days of greater than 2% or more. That is, again, not predictive. It could happen at any time, but at least right now we are in bullish type trading environment despite the little pullback ring. NYSE advanced decline line, this is advancing stocks minus declining stocks, is a cumulative number. Kind of gives us a sense of what's going on under the hood of the market, which may not be as much reflected in just looking at like an index chart. And we can see it moved to new highs along with the S&P and was actually moving to new highs ahead. And also held up very well when the S&P was moving down. So that was actually, we had a bullish divergence in here. S&P followed through on that divergence. A little bit of foreshadowing there from the advanced decline line. And right now it's basically just moving in rhythm. So it's not giving us any foreshadowing at the moment, no divergence. We had to move up to new highs and we're just pulling back on both of these. This is the up volume divided by total volume. We're looking for extreme values which either indicate massive buying way up here or very strong selling, and you can see we have not been close to these. I'm looking at this upper black line or this lower one. We haven't been close in quite a while. So it's just a neutral face. Not telling us anything. This is the percentage of stocks above their 50-day moving average, a very crude measure of stocks in uptrends, and generally easier to make money when most stocks are trending up if you're going long. And so we have 55% of S&P 500 stocks and 54% of all U.S. stocks above their 50-day moving average. You can see we're a bit higher and we're encroaching on that kind of half stocks below, half stocks above. But overall, we're still holding up in that area. So at the moment, at least, that one's okay. The ultimate indicator, I would look at your own trading results. How have you been doing? I do use my own trades as like a feedback mechanism for, am I trading well? Am I trading poorly? What am I doing wrong? And then I'll reflect on that and consider how I want to proceed. But ultimately, yeah, if things are going well and the market's doing good, I'll keep pushing. Sectors on the move. These are the main ones I would seem to be holding up best on all three time frames. Pretty much the same as last week, except technology had a rougher week, which has made it a little bit weaker over even the longer time frames. So these are the ones that are holding up best. Consumer cyclicals, yeah, a little bit down on the week. Financial, best of the week last week, even though it was a down week. Communication services, kind of middle of the pack here on a tough week. These are all hanging out right near the top of the 1 month performance. You can see technology kind of slipping back into the pack, kind of neutral. And financial, consumer, cyclical, communication services near the top over the last 3 months as well. And you can see, yeah, technology just giving back some room, so it's back toward the middle of the pack. That was on here last week, but yeah, these seem to be the ones that are kind of holding up best over those various time frames. So what am I doing right now? Holding Bitcoin, not doing anything in gold, stocks still looking okay for the moment. If, like we talked about, if that correction gets deeper, it's likely I won't get triggered into anything anyway, because the price has to move up for me to get triggered in. So if it keeps dropping, no problem. We're sitting on the sidelines. If we start going up, now is when you're looking for the setups you like, and starting to put orders just above kind of consolidation areas or trigger points for your patterns. And if the price starts moving up, those indexes, which most stocks move with, start moving up. And sometimes the stocks move quicker, right? If you have a really strong stock, it'll start moving up. Those strong stocks start going up. That helps drag up the index. So that's why I don't mind these pullback situations, because they're basically giving us setups. And we can put our orders out there. If they don't get triggered, fine. If they do get triggered, great. Maybe we're in for another run to the upside. End of the year, usually a pretty strong time. November, December, pretty good months for the stock market overall. So that's your weekly outlook. Have a great trading week out there.